As SPY Weekly moves sideways, now that June is complete, what is the monthly telling us? Let's go. As the first week of July has a holiday, the 4th of July, and since typically weeks that involve holidays have lower than average trading volume, we know that benefits the bulls. So let's dig into the monthly now that it has closed. The first thing we notice about the monthly is that this week was really no different about any other as we continue to hold the 5 exponential moving average, which is this green line. And you'll also notice this light blue line, which is the upper Bollinger Band, which price stays within 95% of the time. And it has been also using this as resistance as it's been climbing higher, staying within this Bollinger Band. MACD continues to indicate that momentum is on our side when it comes to the monthly, and with all moving averages stacked to the bull side. When we look at this chart, there is nothing screaming bearish. And even if we drop back down to the weekly, there is nothing here suggesting that we are going to pull back, let alone correct or even crash, like some pundits are calling for on YouTube. And at this point, if all the higher degree trends are bullish, then there is really no reason to get bearish. Now, is there? In last week's video, I discussed once you hit into the trend line, that in the past, the topping has been a process versus just a 1 week event, and likely it's a process which will take some time. And even if we look here, we can see that it did it once again. So likely I was expecting us to maybe come back up into this area and likely even tag the 555 area before heading lower. As let's face it, it's tough to kill a bull. So what's next for SPY? Being that the monthly looks so strong, we really need to see something to change on the weekly first, which we have not been getting. This means we need to see a break of range between the 532 and the 550 area, and maybe even tagging the 555 area before deciding to cool off. But in order for this to happen, we're going to need a catalyst. And even though Jerome Powell is giving a speech in Portugal, so the question is on Wednesday, can ADP employment, along with non-farm payroll and hourly wages on Friday, be enough to move markets? Will this be enough ammo for the bulls to stay on the bull, or give them a reason to start locking in more profits, as the earnings cycle doesn't start for another week and a half with financials? Well, if we peel back the onion a little bit deeper, let's do this by focusing in on the daily. When looking at the daily, we see that maybe before worrying about the 532 area, we need to get through this 540 area, we'll call it, as this range from 542 to 550 on the daily seems like an area of our first concern. Getting above the 550 area, and it will be a quick trip to the 555 area, as the bulls will go ahead and short squeeze out the bears. But getting below the 540 area, and there isn't a whole lot of volume here until you come back down to the 532 area. But remember, getting down below this 540 area means that we not only have to lose the orange 13 exponential moving average, which we bounced off of on Friday, but this darker blue line, which is the 20 simple moving average, and it will be rising. This typically is the bull trend's friend. And many times in a bull trend, we come back down, retest this area only to bounce higher. Now, if SPY breaks through this high confluence area of support, as likely the 13 exponential would start to roll over with the 20 simple moving average, not to mention a decent chunk of volume traded in this area. If we are able to get below this, where I would only get concerned is if we have this 20 simple moving average in blue rising, and we have this 5 exponential moving average in this green color. If that crosses below there, This would typically signify a trend change. And once you have this 5 exponential moving average sloping downward, as we've seen in the past over here, it becomes resistance on the way down until it's able to break up and through to change the trend. But for now, we have a holiday on the calendar this Thursday, and I'm not so sure that the stock market exactly has fireworks planned. Like I've said in the past, and I'll say it again, low volume benefits the bulls, as typically the stock market grinds higher on low volume, especially during the summer. And with all the MMs at the Hamptons, they don't have a reason to push the market lower now, do they? Now, if we look at some of the other indices, will they give us any hints or clues whether SPY is working independently or along with the other indices? And when we look at Q's monthly, well, it looks the same, so moving on. And when we look at the small caps monthly, we see that this strong area that was forming support and resistance in the past, that we did come back through this area, retest the 13 exponential moving average, and closed above this resistance. So for now, are we seeing a bull flag pole being set and the flag being built as volume drops into the flag, which is typical bull flag behavior for a breakout? So once again, if we have SPY, Qs, and IWM all rowing oars in the same direction, this would make us feel bullish. Plus, Bitcoin, the ultimate risk asset, on the monthly has been doing the same with a bull flag being planted. And it looks like we have been trading in a range with that flag as volume has been dropping. So once again, this is looking bullish as well. Are we ready to finally break out moving higher? Now, TLT bonds in the week made a push for the 13 exponential moving average. But once again, this 13 exponential moving average acted as resistance and price got rejected. So we will need to see if we just formed another higher swing low, or this rejection means that we're ready to move lower and maybe form a double bottom before moving higher. Now, VIX in the 12s is suggesting that all fear has left the market, as nothing is screaming for us to move lower or put worry in the heads of traders. Well, thanks for joining, as that's all I have for now until the next video, and we'll see you then.